While the media screams about inflation, elections, and interest rate chaos, the smartest investors are quietly loading up on 7 companies built to grow for the next decade. These aren't hype stocks, they're real businesses tied to megatrends like AI, clean energy, and health tech. One has doubled earnings every year since 2021, and it's still under $50 a share. Want stocks you can trust for the long haul? Let's dive in. First up, Coinbase Global, ticker COIN. With a market cap over $85 billion, Coinbase is one of the few crypto exchanges operating under U.S. regulatory oversight. While many platforms face lawsuits or operate offshore, Coinbase has built its brand around compliance and transparency, qualities that set it apart in the crypto space. The company continues to evolve, offering crypto-backed Visa cards, institutional-grade custody services, and a growing suite of blockchain tools. Analysts expect double-digit revenue growth this year, driven by rising trading volumes and growing institutional interest. What gives Coinbase a real edge is its reputation as a trusted platform in a market full of uncertainty. Of course, it's highly sensitive to crypto prices, and future regulatory changes could affect performance. Still, for long-term believers in blockchain, Coinbase remains one of the most scalable and credible plays on the market. Next is Hims & Hers Health, trading under the ticker HIMS. Hims & Hers Health has a market cap just under $10 billion. Hims is reshaping healthcare by making it more accessible and discreet, especially for topics people often avoid, like hair loss, sexual health, and mental wellness. Through telehealth consultations, mail-order prescriptions, and wellness products, Hims has built a brand that resonates with younger, digital-first consumers. The company is growing fast, with projected revenue increasing 35% this year and another 19% next year. Its recurring revenue model and user-friendly platform support strong retention. Still, the telehealth space is getting crowded, and larger players are moving in. Hims' advantage lies in its emotional connection with users and its ability to turn awkward health conversations into seamless online experiences. Let's talk about McKesson, ticker MCK. A $90 billion healthcare giant operating behind the scenes but playing a vital role in the U.S. medical system. It distributes roughly 1/3 of all prescription drugs in the country and provides logistics, supply chain solutions, and data services to pharmacies and hospitals. Over the past 5 years, McKesson's stock has climbed more than 370%, and it continues to post strong revenue growth. Its scale gives it pricing power and stability, making it a defensive play in a volatile sector. However, tight margins and political pressure on drug pricing are ongoing challenges. Still, McKesson's value lies in its infrastructure. It's not about flashy innovation. It's about being essential to how healthcare works. Then there's Mercado Libre, ticker MELI, with a $127 billion market cap. Often described as the Amazon and PayPal of Latin America, Meli operates a powerful ecosystem of e-commerce, digital payments, logistics, and even consumer lending. Its fintech division, Mercado Pago, is especially impactful, embedding itself in everyday life across Brazil, Mexico, and Argentina. Analysts expect 31% revenue growth this year and another 24% in the next, showing that momentum is far from slowing down. While emerging markets come with risks like currency instability and inflation, Meli's dominance and integration across commerce and finance give it a strong defensive moat. Its edge? Complete ownership of the customer journey, from shopping to payment to delivery, all in one platform. Next up is Microsoft, ticker MSFT, valued at $3.6 trillion. Microsoft's story isn't just about size, it's about sustained innovation. Its Azure cloud platform continues gaining market share, while core software products like Office and Teams remain essential to businesses worldwide. The $69 billion acquisition of Activision Blizzard expanded its gaming portfolio, and its early partnership with OpenAI brought AI tools directly into Excel, Word, and beyond. The stock has risen 148% over the last 5 years, supported by strong cash flow across cloud, software, and enterprise services. Regulatory scrutiny and tough competition from Google and Amazon pose challenges, but Microsoft's integration across both business and personal tech keeps it embedded in daily life. Its biggest edge? Ubiquity. Whether it's cloud infrastructure, workplace tools, or gaming, Microsoft is everywhere. Now let's look at Netflix, ticker NFLX. With a market cap of $543 billion and more than 300 million subscribers. In 2024 alone, Netflix added 41 million new users, driven by changes like cracking down on password sharing and launching a more affordable ad-supported tier. Revenue is expected to grow 14% this year and another 12% the next, as Netflix maintains its position as the most profitable major streaming platform. While competition is fierce and content costs remain high, Netflix's data-driven approach allows it to create localized hits that perform globally. It's not just a content library, it's an insights engine that knows what viewers want before they do. That strategic edge helps the company stay one step ahead in an increasingly crowded space. Finally, we have Tenet Healthcare, ticker THC, a $16 billion company operating 49 hospitals, more than 500 ambulatory surgical centers, and over 160 outpatient clinics across the U.S. Unlike many hospital operators, Tenet has found a way to make the model work at scale. Strategic acquisitions, like its $1 billion deal for 45 surgical centers, have expanded its footprint while increasing operational efficiency. The stock has surged more than 850% in 5 years, benefiting from steady demand for medical services and smart execution. Challenges like staffing costs and complex reimbursement systems persist, but Tenet's size gives it leverage with insurers and the ability to navigate a complex system more effectively than smaller competitors. Its real edge, scale, and efficiency, paired with relentless focus on outpatient and surgical growth, two of the most profitable corners of healthcare delivery. Now, if we take a step back and look at the numbers side by side, the story becomes even clearer. Coinbase stands out with an impressive 80% gross margin and a strong earnings per share figure, showing how profitable a regulated crypto platform can be when it's operating at scale. Hims and Hers, while still in its growth phase, is building solid margins at 68%, a sign that its telehealth model is lean and scalable. McKesson, despite its massive $359 billion revenue, runs on razor-thin margins, just over 3%, but makes up for it with volume and efficiency, reflected in a strong earnings per share of $25.82. Then there's Mercado Libre, showing off both high revenue and a $40 earnings per share, which really speaks to its dominance across Latin America. Microsoft, as expected, delivers strong across the board. Huge revenue, high margins at 69%, and one of the best EPS numbers of the bunch. Netflix mirrors that strength with $39 billion in revenue and a healthy 21 EPS, proving it's not just streaming content, it's printing cash. And finally, Tenet Healthcare, while operating in a tougher, lower-margin environment at around 15%, still pulls in a solid $15 per share in earnings, thanks to its vast hospital and outpatient footprint. And before we wrap up, if you could hold just one growth stock for the next 10 years, which one's making the cut? Drop it in the comments. So what do all these companies have in common? They're not chasing headlines. They're solving real problems, serving millions, and growing alongside some of the most powerful trends of our time, like crypto adoption, telehealth, cloud computing, AI, streaming, and healthcare infrastructure. If your goal is to build long-term wealth, these are the kinds of companies worth your attention. They've already proven they can perform, and the next decade could bring even more upside. And here are 7 best AI stocks that could explode soon. Click on this video here.